what those tensions in the region could mean for the energy market. Pavel Molchanov of Raymond James joins us. Pavel, good to see you. Thanks so much for joining us. Do you expect not just the tensions part of it, but do you expect Europe's energy crunch to get worse before it gets better?
So there is a direct link between record natural gas prices in Europe and the geopolitical conflict with Moscow. There is a pipeline, Nord Stream 2, that was built by Gazprom, supposed to supply the German market. The new German government, which just came to power a few weeks ago, is adamantly opposed to starting up Nord Stream 2. And assuming that that pipeline remains offline, that will limit Russia's supply of gas to Europe. Now, even before that, there has already been a reduction in Russian supply going into Europe, again, as part of this kind of broader sanctions tug of war between the two sides. But Nord Stream 2 right now is a really key question. And by the way, this is not subject to any kind of veto or even decision by the U.S. administration. This is entirely a matter between Germany and the Russians.
And is that, therefore, the key determining factor of energy prices both in the U.S. and in Europe over the next few months, or are other factors going to offset it or dominate it?
Well, to clarify, we're talking about natural gas here, right? So the price of natural gas in Europe is at record levels. That is not the case in the U.S. because, of course, we don't buy Russian gas. Indeed, we don't buy anybody's gas. The U.S. is now an exporter of LNG. Now, oil is a different story. With regard to oil price, we're watching Omicron on the demand side. We're also watching, needless to say, what happens with the nuclear talks with Iran. There is another geopolitical issue, nothing to do with Russia, however. And we're also, we will be watching how OPEC and Russia, as part of the OPEC Plus coalition, are going to be bringing production back online towards the middle of next year. So nothing to do with Europe in a direct sense, right? But for natural gas, that Nord Stream 2 project is the key thing to watch.
On oil prices, Pavel, you are expecting crude to finish next year at $80. It's impossible to predict oil prices, but it seems by your forecast, you're expecting this boom that we've seen to hold, these higher prices. Why is that? Is it a demand side story?
Demand recovery is the big one, absolutely. So, even with very strong post-crisis recovery in the last 12 months, there is still some COVID impact, particularly, you just talked regarding the cruising industry, aviation remains well below pre-pandemic levels. So assuming the pandemic is largely in the rearview mirror 12 months from now, demand should be meaningfully stronger than it is today. Now, supply will also be higher because OPEC is normalizing its output levels. But with a lot of capital discipline on the part of private sector oil companies all over the world, we're going to need those barrels from OPEC to keep the market from remaining undersupplied, because we have been undersupplied throughout the past year.
Pavel, let's get some stock picks. In particular, Bloom Energy is one of your favorite.
Yeah, so going back to Europe, Europe is not only becoming less dependent on Russian gas, Europe's trying to phase out fossil fuels altogether, right? This is the European climate law. It is way more aggressive than anything that Biden, is going to do in Washington. So Bloom Energy has a fantastic opportunity to play the green hydrogen story in the European market. Europe has the most ambitious green hydrogen targets. This is to say hydrogen without using natural gas or any other fossil fuel, instead using electrolysis. Bloom's a great way to play that theme.
And it's down over the last year, so maybe an opportunity there. Pavel, thank you for joining us with some of your forecasts. Pavel Molchanov.